energy stocks are very much in focus at the moment, given the strength we're seeing in natural gas and the price of oil. So with ExxonMobil pushing back towards the highs for the year, are we going to see it break out, or is actually now the time to sell? I thought we should do an update on ExxonMobil, the second largest oil company in the world, just based on, of course, what we're seeing happening with the oil price up near a 7-year high. Natural gas has had a big move as well. So clearly it's a big few months for energy stocks recently. And we're seeing that reflected in the stock price. Since July, the price of ExxonMobil has risen from, $52 to briefly above $62. And I think it's interesting because we did see it in June of this year trade up near $65 and then run out of steam. So I thought, well, let's do an update. Let's catch up with the recent news driving this market, find out what impact natural gas in particular might have on the ExxonMobil price. So I'll talk about some of the news, some of the levels to watch. Then we'll come back and look at the technicals in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on ExxonMobil. We've seen the stock move a little since the last video. There's a lot going on in the energy markets, so I thought, well, let's do a catch-up and have a look at the next few months for the stock. So as usual, in this video, I'll talk a bit about some of the recent news, how it's being affected by what's going on with oil and natural gas. We'll look at the levels to watch, then we'll jump back onto the platform and take a look at the charts in a bit more detail. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel and it means we can continue to push out lots of different videos on the various stocks we look at throughout the week. Right, let's get into it and take a look at ExxonMobil in a bit more detail. So a bit of history. The company was formed in 1999 by the merger of, yes, you guessed it, Exxon and Mobil, and it's now the second largest oil company in the world by market capitalization, so by how much the company is worth. We had second quarter earnings out for the company at the end of July. These came in at 110 cents per share, which was slightly ahead of expectations. So that was a bit of good news for the company and investors. And not surprisingly, the oil price is helping here. That's the case for the sector as a whole. We know a rising oil price, clearly normally good for oil stocks. And with oil trading pretty much near a 7-year high, it has lifted a lot of the stocks. And I think ExxonMobil has benefited again. But another story going on, if you watch energy, is the price of natural gas. The natural gas price at its peak in October was up by about 150% for the year to date. Massive move in the gas price. And again, this is something that ExxonMobil says it's going to help the next quarter earnings. So it expects to add something like 500 million to 900 million to its earnings in the third quarter because of this rising price in natural gas. So I think, again, that's something that's given the stock price a bit of a lift. It's been a good year for the stock. It's up almost 50% year to date, ExxonMobil. So a great return. And it still pays a good dividend. It pays around just over 5%, I think, in terms of dividend yield. Some would say it's got a lower price to earnings ratio than other companies in the broader market. So that's something that may make it attractive as a blue chip stock. But as usual, I mean, the fundamentals in the recent news looks pretty good. Let's take a look at the charts. But before we do that, let's just catch up with some of the levels to watch. I think the big hurdle, the immediate one, the highs we've seen so far in 2021, I think they traded in June of this year, traded up to $65 for the stock. After that, we've got to go back a couple of years and look at the highs from November 2019. They're coming in around $73. So a bit of a hurdle on the upside from here. But looking at the downside, the most recent low comes in around $57.50. There's bigger support down at $52. But as usual, to put some color on these numbers, let's take a look at the charts. I thought we'd start with a longer term view for ExxonMobil, because if we go back to around 2016, so I'm looking here at the last 5 to 6 years or so, you can see it's been an underperformer if you consider what the broader stock market has done over the years. We've seen some great years from the S&P, the Dow, the Nasdaq. ExxonMobil has been just gradually drifting lower. So I think this is something that we need to bear in mind when we're looking at it from a medium-term point of view. You know, that downtrend at the moment, there's a couple of ways of drawing this downtrend. I thought I'd put it on in here, just picking up on the peaks from October 2018 and April 2019. That downtrend's coming in around the $65 mark. So it is going to be interesting around here to see if it can shake off this or start to shake off some of this longer term weakness it's being experiencing. But for now, let's just focus on what's been going on for the last couple of years. So this is the last 2 years or so for ExxonMobil. Clearly, plenty of other stocks. It got knocked heavily in March of 2020. What's interesting, it came back to it pretty much a year ago. It came back to those March 2020 lows around the $32 mark. And then we did see a strong recovery from there, pushing as high as $65 or thereabouts in June of this year. Then some volatility, and we're back up at the moment. So I thought, well, let's start things off as usual with our moving average. So I put a 20-day moving average on the chart. And as a reminder, moving averages work well in trending markets where we get a buy signal if the price moves above the moving average. And if the price falls below the moving average, we get a sell signal. They don't work so well when markets are sideways. We can get just choppy signals. But the latest signal for the record off this moving average was here in September, third week of September, as the price moved through about $55. We had a buy signal off the moving average, and it's done well so far. That moving average at the moment is coming in around $58. So if we saw the price slide about $3.50 from where it is at the time of recording, that would generate our sell signal. So at the moment, the moving average is bullish. If we take a look at the RSI down here, RSI is traditionally used as overbought, oversold indicators. So as a way of signaling when the price has moved too far too quickly. If we go back to the signal in August, that was suggesting the price had slid too far. It was oversold. If we go back to the signal in June, we can see it did actually pretty much nail the peak in June, suggesting the price of ExxonMobil stock had risen too sharply. And this is where we are at the moment. We are overbought at the moment. So again, it's a suggestion that perhaps the current run in ExxonMobil has gone too far. But one caveat to overbought, oversold indicators is they can give you a signal to go against the trend too early. But that's something I think to bear in mind at the moment, what we have with the RSI suggesting it's perhaps a bit overstretched down here. So let's look at the trend. I don't think we have one at the moment. We did have a trend off the November lows into the highs in June, but I think we have fallen out of that trend and we are somewhat sideways at the moment. Sideways in a fairly wide-ish range, a $10 range from 65 down to about 52, so $13 range there. About 20%, I suppose, is the swing there. But we've got good support down at 52. But I do wonder if 65 is going to be something of a problem again. So I think some investors looking at charts would perhaps be a little bit cautious as the price pushes back towards $65, thinking, well, hang on, is it going to run out of steam again? Are we going to see the sellers come back in, particularly if we see perhaps some cooling off in the prices of oil and natural gas? And I think 65 is really the level to watch. I think if we start to break through there, then perhaps it's threatening that longer term downtrend. Perhaps we're seeing a much more bullish outlook, medium to longer term for the stock, and we can start getting much more aggressive with targets. I mean, for me, if it started breaking through 65, then I'd be looking at the highs from 2020 as the next objective. They're only in at $71, so it's not like we're going to have a massively aggressive target. But I think if it breaks through 65, it does suggest the stock has found momentum again, and we can start looking at a move into the 70s from here. But at the moment, I think many would be just a little bit cautious that $65 has proved to be a pretty good barrier so far. On the downside, if we did see it sell off from here, it's in a sideways range, but there are still opportunities within the range. I think $52 clearly is the area to watch. The lows from August, I think if we saw it drifting down to the mid-50s, then perhaps it looks like a trading buy. So from a longer term point of view, I think it's something of a sort of sit on the hands at the moment and see what happens with $65. I think if it breaks that, we've got quite a different technical picture that we've had for some while for ExxonMobil. But at the moment, I do think 65 could continue to be something of a problem. That's it for this update in ExxonMobil. We'll see if it can move out past that high for the year or if it's going to struggle again. We'll come back to it, do an update in the months ahead. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing.
For more trading videos just like this, please subscribe to our channel.